It's a great opportunity for India to localize. It's a great opportunity for us to scale up because the world wants to dealing from China. So we're walking on a landmine, to be very, very honest. The geopolitics is so unpredictable, but we are a very resilient industry. The industry is suddenly metamorphosizing from a metal bashers industry into a technology industry. European automotive industry is under tremendous pressure, and they are therefore wanting to source more from India.
Good morning, everyone. Hello, and welcome to this edition of MSME Conversations. We are absolutely delighted to have with us Mr. Vinnie Mehta, who's Director General of ACMA, Auto Components Manufacturers Association, a very important segment of our economy. And this builds into our Sumpoorn work that we are doing at Jakarta. The Sumpoorn Index, which maps the sales activity of MSMEs, it's a monthly high frequency indicator, has been showing remarkable buoyancy since November last. And in fact, in March, we were expecting there were a lot of negative risks to the economy. So we were expecting the numbers to be much lower, but they're much higher than we expected. So, we hit a 0.65 in March this year, which was the highest in 44 months. Wow. And the buoyancy has stayed. So in April and May, we had April, May usually it comes down a little bit, the activity. So it was 0.58, but in June, again, it's back to 0.6, which is, if you look back for the past 8 months, we see that month on month with the previous year, it's higher. So the last 8 months have really seen very resilient. Resilient is a kind of, I'm getting a little tired of using the word resilient actually, but it means that there are risks out there. We know what's happening at the tariff front. We know what's happening to the West Asia crisis, everything. And still we're doing remarkably well against all odds. So that is something that we really need to probe. So we have been talking to various associations also to understand what is the ground reality and what are they actually seeing on the ground. So for the auto sector, especially since the GST rate cut, we've seen a massive boom, and sales are record sales for some segments in some firms. Right. And I think from ACMA, the data says that the FY26 industry turnover was 7.6 lakh crores. You are up 12.7% YOY. Yes. And this year, you are expecting an 8 to 10% growth. Right. So we'd like to know from you, what is the broader picture for the auto component industry? And also, what are the 2-3 swing factors that can move it below the 8% or higher than 10% growth? So if you could give us a kind of a macro overview.
So thank you, Dr. Sumita and Narsi for having me. As you have very rightly pointed out that the entire automotive sector, the both vehicle industry as also the component industry, has been doing really very, very well since the time of the GST rate cut. And the auto component industry literally grows on the back of the domestic vehicle sales. That apart, we're also a very strong export community. We're very export competitive. And what you would have observed in the year ending March 2026, that is the last financial year, we did pretty good when it came to the vehicle sales overall. Largely, sort of the buoyancy was in the second half, the last fiscal. And we saw a record of 5.6 million in production of passenger cars. We did over 1 million commercial vehicles. We did a whopping 26 million two-wheelers. I'm talking about production. We did more than 1 million of farm tractors. Now, in the past, what we observed or what we have been observing is, of course, every vertical that I mentioned is cyclical. But what we have been observing since the second half, largely from the second half of the last fiscal, is that all the business cycles are converging and everything is moving north. So this is something really very, very good and unprecedented. And I would like to keep our fingers crossed. And I hope and I wish that the good times prevail. And again, what we thought was that after the financial year ends, the sales, because typically in a quarter that literally goes vertically up, it sucks up the sales in the ensuing quarter. But very interestingly for us, the sales have been progressively growing quarter on quarter. The AMJ quarter was really very, very good from the vehicle industry's perspective. And just today, SIAM has come out with their July numbers. They're also really very, very strong. And in this backdrop, the component industry did exceedingly well. We had lots of challenges as an industry. There have been we have to use this word resilience, because I think we've been a truly resilient industry. It may be cliched, but it is. And interestingly, I echo your sentiments. We have our annual session coming on 2nd of September, and it's themed beyond resilience. So, and as you very well pointed out, the last fiscal ended with a very high for us, more than 7.5 lakh crores in our revenue, in our turnover. Exports were also, and that is despite the Trump tariffs, despite the wars going on, the exports did very well. We grew a tad 5%, but, we could have gone down. And the exports are doing well, in fact, because there's a very strong China+1 playing out. And why that China+1 is playing out is because the Europe and the US market, while those markets are under pressure, they are now wanting to de-link from China as much as possible, and that has happened because of, you would have heard about the challenges on front, the curbs on the front of the rare earth magnets, the curbs on the front of technology curves for batteries, for electric vehicles. So what's very interesting, what we are observing is that the newer RFQs that we are getting, the request for quotations that we are getting from customers overseas, they want us to be, whenever we supply whatever products that we are supplying, that entire product supply chain should have no connection with China. So if I'm a tier 1, as a tier 2, imports cannot be from China. So one, it's a great opportunity for India to localize. It's a great opportunity for us to scale up because the world wants to de-link from China. And as I said, the exports did well. They grew 5%. They stood at $24 billion. Probably the only tad negative here was that because the domestic market came back so strongly, typically for newer technology items, you end up importing.
Before I get nursing in for the trade part, I just wanted to know, do you see any risks this year?
The risks, so we're walking on a landmine, to be very, very honest. Okay. The geopolitics is so unpredictable, and that's why I said that cliched though, but we are a very resilient industry. What I'm very happy about is that when the vehicle sales have come back or are continuing so strongly, not one vehicle manufacturer has come back to us saying that, hey, we could have grown more, but for the component sector, we have been able to support the vehicle manufacturers well. I feel very proud of the fact that the entire industry continues to grow very robustly. Yeah, and I'm sure you would have seen definitely a lot of the cost pressures that are there on the industry. You would have found a lot of the results that are coming. We have very good top line, but the bottom line is sort of getting eroded. So that's of concern, So to be a healthy industry, and the basic logic says that the top line and the bottom line should both be growing. Though the bottom line, if you as a percentage, is still good, could be better, but it's sort of decelerating, and that's not good. Because of the war, we've seen a whole lot of costs go up, especially the input raw materials that came from West Asia. And also there was a huge, the labor problem, it's sort of, marginalized, raises its head. So that's a big challenge one has to be wary of. Energy cost has gone up. Logistics costs, that has gone up. So there are quite a few challenges that are there, but keeping fingers crossed, we've been able to manage well. And again, internationally, there is another problem that is of memory chips. And it's not yet so pronounced in India, but one got to keep a watch because that would sort of apply for vehicles, as we call software-defined vehicles, and that would be for connected vehicles and that have ADAS and stuff like that, So since we do not have a great population or percentage in sales of such vehicles, we've been able to manage. But if that proportion were to grow, then the memory chip issues would also raise its head.
So the first question is more tilted towards the exports, because you really brought up a very, very important fact that $24 billion of export is what the industry has been able to accomplish. But nevertheless, when you're looking at the import side, it is $25.5 billion.
Yeah.
And our customers, for the exporters from India or elsewhere, want a no China linkage. So how does it all come together in your ecosystem now?
So
and how is the ACMA going to help the institutions, the members gear for it?
So there are many ways to look at it, and there is no one particular answer to this. But let's say, first of all, as an industry and as a country, we are committed to localization. Okay, there is no denying about it. We are a success story of local small and medium enterprises, and everybody is very proud of us, and we are very proud of ourselves. Okay, that's sort of one part of it. The second part is, honestly, in today's times when the rupee is depreciating so fast, last year depreciated 10%, it's in nobody's interest to import. Everybody wishes to localize. Okay, because as we mentioned, we're finding the bottom lines eroding, and therefore nobody would like to import. And also at times the small and medium, because we are a very small and medium enterprises industry, the cost of capital in this country is so humongous, they shudder to take a risk should they fail. In technology, as a nation, our record is very poor. Our spend of GDP on technology, R&D, is sub 1%. If I recall the number correctly, it's 0.75%. On an average, the auto component industry also spends 0.75%. And there are, of course, outliers. Okay, I'm not talking about them. I'm talking about a plain Jane small enterprise. Okay, so there's, of course, a question mark on companies that are not investing in technology. How do they remain competitive? Because the industry is suddenly metamorphosizing from a metal bashers industry into a technology industry. Okay, the EVs are nothing but like mobile phones on a wheel, or whatever you may like to call it. It is metamorph, something like that. That's one aspect of it. But why do imports happen? Import happen, as I said, because of technological reasons. The domestic industry may not have technology at that point in time. Sometimes technology challenges come by because of the regulations. Okay, sometimes the regulations are imposed on the industry. They could be imposed without giving them enough time to localize. You may not have enough volumes. It may not justify the investment at that point in time, and therefore you import. Okay. Sometimes the import happens because, honestly, you refer to China. What is the scale of the industry in China? They produced 30 million cars last year. They produced 4 million commercial vehicles last year. As we said, we did 25 million cars. We did 1 million trucks. The sheer size, scale, and the diversity and the competence of them there is so much huge. Okay, we can Indians would allege and say, oh, you can't compete against a country. We can't be competing against a country. We are one company competing with a, but that's a reality. So if you to survive, you got to compete. Okay.
Yeah.
You got to understand this. So that's sometimes import also happen because there could be certain multinationals who take a decision that, okay, India will have a mother plant of a product A, and let's say another geography, say China, okay, we will do a product B. And let's say anywhere in the world, we will supply from India that part A and from China that part B. Okay, so sometimes imports also happen because companies take a strategic decision based on the geography, on the competence of a particular location to manufacture a particular product and supply worldwide. So these are some of the reasons typically why import happens. What we find is whenever the domestic market grows very fast, the quantum of import goes up, and whenever there is a stable growth, as I said, the vehicle manufacturers do not want to import, okay, because there's a huge cost to import. Let's say as the electric vehicle gains traction, okay, you will find that in the initial stage, because we don't make batteries.
Yeah.
Okay. So batteries get imported. There may be people who are now making battery packs. Okay. But nobody is genuinely making the chemistry. We will find that also happen next couple of years' time. There'll be productionization of that. But till such time, you will have battery imports happening.
Two very important questions as a follow-up on the export-import part. And very, very thankful that you have dwelt at length on it. If I were to look at Europe, and we've been welcoming of the EU FTA that has been signed, and it augurs well for the industry, especially the auto sector. And in that context, if I were to look at Germany per se, there have been significant developments coming in the form of certain worrying signals from, let's say, Volkswagen, Stellantis, or BMW, Audi. And either they're cutting down on production or they're ceasing production somewhere.
The laying of people.
Exactly. Yeah. So, and given the fact that 29.5% of exports are to that destination, is this a matter of concern, and how is it going to be dealt with? That is one part of the question.
Yeah.
The other part I would like to flip and say, is it something that is signaling that manufacturing from those places is moving to India?
So first of all, you alluded to the FTAs with the European Union. Not just the European FTA, we have been a strong advocate of FTAs. Okay. There's a very fine line between in bravery and foolishness, right? Okay. We have been advocating it. Or yesterday, the government signed the terms of reference with the SACU region, which is South Africa, and joining for geography, whether it is the UK CETA that happened. We have been advocating and supporting the government on FTAs, knowing fully well that the import tariffs of these countries have anyways been lower than India's. And by signing the FTA, India will lower its duties, and there's a further risk of import. Okay. But we believe that we are competitive enough. We believe that the automotive industry is truly a global industry. The supply chain is global, and export and import will go hand in hand. We are also at the same time concerned about the import happening, but we look at the problem in a different manner. We would while want to localize and address the problem of import, we're also wanting to export more. We're happy whenever the trade is net foreign exchange positive, and we would endeavor to grow the net foreign exchange. That's how we envision our industry to evolve. There will be imports in an industry that's, if we have to export, we have to live with the fact that there'll be import. You cannot have one-way street. You talked about the EU market sort of slowing down. EU market definitely has been slowing down, and their worries stem from many facts. One, of course, because of the war that's happening, it's impacted everybody, but they have been directly involved with the Russia-Ukraine war that's happening, well, in the backyard. Energy prices have gone up because, Russia would supply energy to Germany, stuff like that. That's no longer happening. And that holds for UK and a lot of the other geographies. The energy costs have gone up very, very significantly. The energy costs have gone up very significantly for the European Union. A lot of the German companies were hugely exposed to China, VW and SAIC. And interestingly, the Chinese stopped buying international brands. The European companies or vehicle makers did not graduate or transform to electric as fast as the Chinese did. Nobody did, in fact. The Chinese sort of literally shifted focus of buying only Chinese brands. So the profitability of the European companies from China literally vamoosed. So the profitability from China is under, or those who had exposure to China, for the German companies, that's really under pressure. That's dried out. Okay, the domestic market isn't doing very well for them, so they're under tremendous pressure. Okay. Also, they had a huge exposure to the US. They were exporting big quantities to the US. That's also dried out. Okay. Well, it's under pressure, not died out, because Trump has put tariffs on them, and EU and US relationships are no longer those of one movie. So the European automotive industry is under tremendous pressure, and they are therefore wanting to source more from India. We are very well engaged with some of the top vehicle makers who are wanting us to do private exhibitions for them. Within their private exhibitions are called tech shows, where we do product display for them, those commodities that they want to procure. It's a private exhibition for that particular company, kind of a stuff. So there's a lot of traction coming in from the European Union, and I guess the India-EU agreement pretty much is based on that premise, because they also want to de-risk against certain geographies that are not allowing us to grow as much as we would want to. So why we as an industry push for FTAs? The reason is knowing very well that our duties are higher, and over a period of time they will come down, and those countries already had we look for better market access for sure, okay, but we are very hungry for technology. As I said, that we do not have sort of a great record of creating or producing technologies and products. In India today, while the EU car makers have done very poorly, Volkswagen over the years, I think they've been, how many years, 20 plus years in this country, okay, their market share remains 2%.
Yeah.
But what is very interesting is from the component sides, the Bosch, the ZF, the Continental, there's so many of the German and European component makers. They are ruling the roost. Okay, they are in a very dominant position. What we expect is from the European Union and the companies is that they will deepen their technology presence in the country. And this will lead to more absorption of technology in the country. Okay, and maybe some point in time they could be spawning off. People will learn, they will start on their own, but what we are looking from them is more investments in technology. That's what we want from them. And of course, we believe the times are such that people are actually sourcing more from India. And I hope we will be able to scale up well to supply to those geographies.
The second question, further question that I have. And,
yes.
this is as far as the EV component penetration.
Yes.
So when I look at the numbers,
Yes.
I have a number which says that the EV components proportion was about 4.6% of the total OEM supplies.
Absolutely. Yes.
And
indeed.
that being the situation, and when I look at no technology person, but when I looked at the things that get eliminated as a result of the EV becoming the de facto mobility, engine block option and pistons.
Engines. Yeah. The drivetrain.
Multi-speed, the gearbox eliminated and substituted with single speed.
Yes.
Fuel systems eliminated. And substituted by charging ports. Exhaust systems completely eliminated. Powertrain will change because power electronics will take over.
Yes.
The HVAC is changing in terms of what it requires. Fuel tank is going to be dispensed with and replaced by batteries. Now, with all these changes that are happening, how is the EV component industry, i.e. the ACMA members, how are they going to gear up? Because, as you said rightly, R&D is limited. Technology adoption is not at the desirable pace because it does need significant capital. Cost of capital is high at 8% to 11%, as we discussed. In that scenario, if really Indian automobile component manufacturers have to have a very critical share or a substantial share of the automobile per se, how are they actually going to cope with it? And how are they going to change? Or is it that the OEMs themselves are in a position to help adoption by funding or providing the support mechanisms so that they are actually enabled and capacitized to start supplying? What is this collaboration that is likely to happen, or has it not yet happened?
Okay, so first thing first, that's a very, very nice question, and it's often asked to us. Interestingly, and I don't mean any offense, this is the way the market has panned out. Look at the penetration of, or look at the absolute numbers that we are doing. Last year, we did about 1 million units of two-wheelers. We produced 26 million in total. So EV was just 1 by 26. Look at the car industry. I think we did 100,000 units, if I'm not mistaken, and we produced 5.6. We may double that number this year. Does it change anything? So from a component maker's perspective, that slice is so small today. And you also must look at it this way, that 1 million unit or that 100,000 unit, that opportunity again gets split into multiple component makers. And also there are multiple vehicle makers who have these numbers. So then per company, that opportunities is a very, very thin slice. I'm not sure that's exciting enough. Okay, for individual companies. But what is also very interesting is that today, all tier ones that are there in the auto components space, number one, they're world-class in their manufacturing practices, in their governance practices. Most of them are listed, okay? And also they are technologically ready because the EV technology can be bought off the shelf. Everybody today, you will find dime a dozen technical agreements. You will find largely on the social media. That's where the news happens. So the tier ones are all very capable. They're all very, very ready to supply. The government has a vision of, and let's say if we're finding now traction happening, as I said, I don't remember the numbers exactly. Probably the two-wheelers are today at 8%. Probably the cars have gone up to 6%. But we need to verify these numbers. But what I'm saying is that they're at the threshold when the takeoff happens. We have to wait and watch those numbers, okay, how they pan out. The government's vision is that there be 30% penetration of EVs by 2030. But the government does not give a split of what percentage will the two-wheelers achieve, what percentage will the cars do. And in the commercial vehicle stage, maybe for the smaller entry-level commercial vehicles, it's a viable solution, but it's not viable globally for long distances. China is doing that, but other parts of the world, you do not have many successful cases on deploy of electronic. Probably hardware, hydrogen will be a better solution for long run, long hauls, heavy trucks. Okay, buses, yes, that is doing quite well. It's gaining a lot of traction because bus is purely a government and a municipality subject, and that's doing well. So it's not that the entire market is transforming into electric. It's still a long way to go. You must also understand that the carbon neutrality date for India is 2070. For Europe, probably it's 2040. For Japan, I think it's 2050. So our carbon neutrality date is not like a gun on our head. There is time available for us to transition. There are many, powertrain variants that are working in the market today. There's electric, there's hybrid, there is ethanol or biofuels. So the industry continues to cater to all these, okay? It will only be, the economics of these powertrains and the cost of ownership that will eventually decide which powertrain eventually succeeds. But of course, there's a boundary condition because if the government continues to tighten the efficiency norms, like we are talking about moving from BS6 to BS7,
Yes.
On the common average fuel efficiency, we are at CAFE 2, we are moving to CAFE 3. As these norms get tightened, you continue to move towards more efficient vehicles and sort of move away from the fossil fuel vehicles. So it drives you naturally towards electrics. But again, we have to wait and watch and see how the landscape emerges. At this juncture, it's not threatening. Also, let's say if the government, going by the government ambition of 30% electric by 2030, please try and understand that 70% is still conventional. Also, that 70% would have grown very significantly because the entire base is growing at 10% plus. I mean, last year was crazy, but let's say even assume conservatively every single year we go 10%. We are looking at a significant expansion in the entire base. Thirdly, when I mentioned too about the carbon neutrality dates of India and various other countries, a lot of the countries would transition to electric before India, but they will have a very significant ICE base. Somebody needs to service that. That will be India. We will be exporting. We believe we will remain competitive.
So it's been really, really fantastic. And thank you for giving us the time. It's a pleasure and a privilege to have had this conversation with you.
Sure. Okay. Take care.
Thank you.
Thank you so much. Thank you.
Have a good day. Bye.